Hello there and welcome to the Pipsoclock Monday weekly analysis for advanced traders. And this Monday, we are going to be covering what we are going to expect from the markets this week, running from today, 15th of July, all the way to the 19th, Friday, 19th of July. And we're going to be covering the following instruments. We're going to be covering metals in five categories: metals, currencies, indices, energy, and crypto. And of course, under metals, we are going to be focusing mainly on gold. And then on currencies, we'll be focusing on the majors: Euro USD, GBP USD, USD JPY, USD CHF, and USD CAD, and a couple of others as we deem fit and find necessary to help impact positively on our trades during the week. And of course, under indices, we'll be focusing on the US 30 or the Dow Jones 30, Dow Jones Industrial Average 30. Okay, so energy, we'll be looking at WTI crude oil, and under the crypto section, we are considering Bitcoin, Litecoin, Monero, and Co. And then in the analysis, we are going to be focusing on four aspects. One, the trends, the market structure, key levels, and risks and reward. Now, as we progress over time, we might begin to start considering other micro factors to bring into the analysis. But for now, we'll just focus on the the ones that I've mentioned: the trend, market structure. Um, we look at key levels and, of course, risks and reward. Four key factors. All right. So let's get started. And of course, we're going to be starting with gold for now. And so, talking about weekly analysis, so we're going to be focusing on gold on the weekly time frame first. Then we navigate down to two lower time frames, daily and the 4 hours time frames, and then we'll find the trend, identify the trend, and then the key levels, the market structure, and then we discuss the risks involved in each market. All right, I trust that this will help to really make your trading a delight every week. All right, so welcome aboard. My name is Ifan Uche, and I'm going to be your anchor doing this. Okay, so let's get started. And this is brought to you by the Pipsoclock media team, Pipsoclock team. Okay, so let's get started quickly. So you are seeing the gold chart, and from what we have here, I think I should move this so that it won't disturb us. Let me put it somewhere here. Okay, all right. So what we have here on the gold chart, first off, let's look at the trend, the immediate trend. So, and we're going to be looking at considering these two periods, This is this past week, and this is the week before. And from what we gathered here, it's easy. You know that what they say, the trend is your friend. Always follow the trend. And something that a 9-year-old could spot, it's easy. So from what we see here, we see a higher high. When you compare the two periods, we have a higher high and a higher low, indicating a bullish trend. So we have dealt with that trend, bullish. And then the market even opened. When you look at the opening, you see closing at 2,410.96 and opening at 2,411.14. So the opening also suggests that the bulls are strong in this market. So if you have been holding any selling positions on this, you want to really rethink your decision this week, except you want to carry them through the week, and of course, maybe pay metal custody fees where if your broker accepts it, okay? And so you want to really be mindful of what you do, particularly if you have been holding a sell position. So bullish for us. So now on the market structure, still on this weekly time frame, you see that the structure is a bullish structure. Let's just look at from here, from around here, okay? The structure is bullish. So let me delete this. The structure is bullish, okay? Look at it here. It's a bullish structure from here, and you see that the structure is still showing you series of higher highs and higher lows. You can see that. So, and here now that it appears from here going sideways, this is more like a flag, okay? Uh, well, let's leave that and just focus on what is happening right now. Because you can just see that the structure is bullish. Okay, and if you consider the three moving averages that we are now, the moving averages that we have used for analysis are three of them. You have the 200 period moving average, you have the 50 period moving average, and then you have the 21 period moving average. Simple. Okay, so all 3 points bullish. So for us, the market is bullish, the market structure is bullish structure, and then key levels. So we will now want to switch where we can bring in the key levels. So let's be switch to gold still here. And on the key levels, we have the pivot points, pivot key levels, and that's what we're using. The additional we'll add is Fibonacci key levels. So on the key levels, of course, even the moving averages are also serving as key levels for us. And we have here on the daily pivot points that you have the key levels here, daily pivots, you have the weekly pivots here, right? And you have the monthly pivots here. So here is the daily support, daily resistance, and so on. So and where prices are currently at the daily pivot points, been trying to make its way down, but then it appears the bullish um, trend appears to want to resume from what we are seeing here. Okay, so and that's about the key level. So where to look out for? Okay, in terms of the key levels, we want to impose Fibonacci into this chart. Okay, alternatively, I could switch here, of course, knowing that I'm going to remove it. Let's switch to 4 hours from here, and let's bring in our Fibonacci retracement tool. And since we are talking bullish, so we're going to connect it this way from the top there. Let's do it all the way to here. Okay, so now with what we have here, so key levels to watch for us, we look at 50% at which is 2,371.81. Let's check and see whether it's incongruent with anyone. 2,371. Okay, here is where we look at. Let's go back here. Alternatively, I could easily let's impose it here so that we won't have to be going back and forth. So let's impose that here since this is on 4 hours also. So we want to run all the based on the rise from here on the 26th of June to the high of the 11th or 11th rather of July. Okay, so based on that, see 50% retracements. That's 50% retracement. That means let me see what level did I plot it here? Is the same, but it appears okay. I think I let's look at this. This is July. Okay. So I think that's the what I did here now. I covered more space. For the other one, I think we stopped around July 1, which is around somewhere around here. Where is it? Probably somewhere here. Okay, somewhere around here. Okay, but then we have stretched it further down. So we will be looking at now for on the daily time frame. There's no confluence here, so to say. So we have 50% here at 2359.1, and then we have 38.2% around 2343.65, and that is around where we have the 200 period moving average. So is there a possibility that gold price can drop all the way to this point? Of course, anything is possible in the markets. So if we are to do anything, all right, we want to wait based on the trend we've got. We want to wait for opportunities to show up as price retraces to 50% and probably 38.2%. So we'll be looking for entry around here. So when you are monitoring your gold this week, be focusing on entries around here. And of course, who said you cannot trade on a lower time frame like 1 hour? Of course, you can also, but then the parameters and conditions will change. In that case, now if I plot in, let me impose this here again too, but this time around, you see where we'll cover. We'll just cover from here, and of course that will give us 50% retracement around 2387. So price still likely to drop and gets to this place. If we feel that place is still far away, probably we could just use the low of which day, that should be Thursday. And in that case now, we'll be looking at entry around 2397. But this is for someone that is trading on daily. That's a day trader that wants to just pick a trade today, Monday. So you'll be considering entry around here because there's a confluence around here. You have the support level one. You have the 50% moving retracement, feeble retracement at 2397.32, and then you have the weekly power point. So around here is a strong zone. So between 50% retracement and 38.2% retracement, which is 2390.88 all the way to 2397.32. This can serve as entry area for today, Monday, if price should retrace back. So you can position yourself around here. That's for gold. But then on the weekly basis, we switch to 4 hours. You want to watch during the week. We are going to, have more than that to chew. Let's get back on this. Let's see if we can. Okay, let's see if we can adjust this to fit to what we have here. Okay, let's switch it. Okay, good. So on the weekly, if you switch 4 hours, because 4 hours, this entire period they covered 1 week. This here covered 1 week. This here place covers 1 week. So with this now, we'll be expecting 50% around 23.59, and Fibonacci, power points for us doesn't agree with that, except we want to plot a weekly power point analysis, which I'm not doing in this video right now, okay, in this analysis, right? So we just look at here, between here and here, at least moving averages are there. So between 2343.65 and 2359.10 this week. So this is more like you waiting until opportunity shows up around these two areas. It could happen today, it could happen on Wednesday, it could happen on Thursday or Friday. And so that's for gold. All right, so next, let's switch to another instrument. Let's look at the crude oil, WTI. And so WTI, let's check on the weekly time frame. On the weekly time frame for WTI, we are looking at the market having dropped all the way from here and ranging around here. But even within that range, look at the trend. If you want to consider the trend of for this week, comparing what happened last week, you can see here that though moving averages say price is trading above them, which is a sign of an uptrend, but there is a conflict, a disagreement with what happened on Friday. Sorry, with what happened last week compared to the week before. We have a lower low and a lower high, suggesting that there is an indication that crude oil price, WTI, will go down probably in the coming weeks. And that may be a retracement and it may be a reversal. So that it's going to go down based on this, if this sign here is anything to go by. And then on the market structure, you can see, though the market structure appears to be bullish, but the market structure is not even bullish. The market structure is just sideways. All right, remove these indicators, you see a market that is sideways. And the question is, should an investor, stay on this, or a trader stay on this? All right, your guess is as good as mine. This might be a time waster. Okay, so let's just switch to 4 hours and see whether we can actually find opportunity on the lower scale. Yes, the market structure on the 4 hours time frame is still bullish. It's still bullish. However, it's still more like quiet around here. And currently, it appears it's either a retracement or a reversal happening around here now. So you want to watch that. I don't want to give much insight into this because I'm not even gonna look at it because of the way it is, because it's not 100% clear which direction it's going. Okay, but if you still impose your Fibonacci retracement tool there, you can actually draw it from here to here. Okay, and you can see where you have your 50% retracement and your 38.2 retracement. So these two places, 80.53 and 81.32, can be good places to wait for a buy, and that's the best I can do with this. Let's switch to DJ 30, which is Dow Jones Industrial Average 30. And on the weekly, though the market is closed at the moment, if you look at it on the weekly, you can see that it's also a bullish trend that we have here. higher high and higher low between these two periods. Okay, and that's that. So that's higher and higher low between the two periods. Then if you now uh, drill it down to the market structure from here, the structure have been bullish. Conclusion. So, and by the three moving averages, is bullish still. So, what do? You look for buy opportunities, and where can you find them? Let's use Fibonacci key levels. Let's use key levels. So, if we draw from here to here, let's stay up there. So that means that we can be looking for. Oh wow, this is not good here. So I can pull it back a bit. Let's place it here. Yep, good. So because this is where we have the 200 moving average, it will be good that you set your zero field there. It will be a bit risky. Okay, so you can look at that. You can see the levels to consider between here. There's a confluence here between 39089.9 and 39324.4. Those are the two levels we want to consider this week. So after price has, it's either price breaks and continues going up, in which case, if you want to check again, maybe tomorrow or next, we will now be able to say, okay, let us reanalyze and find common grounds. Common grounds. Okay, so that's about DJ 330. Next, let's consider Bitcoin. So I think what we'll just do is for each of these um, components or markets, we'll just pick one. All right, so for metals, we have done gold. For indices, we have used DJ30. So let's use Bitcoin, as that will also be a pointer to what others should expect. So let's switch to 4 hours for Bitcoin. And Bitcoin, yeah, in the past few days, it has been falling. You can see from here, 1, 2, 3, 4. It fell for 4 days, and then yesterday it was rejected around here, and then probably is trying to go back, and now who knows how far this can be. Okay, so now let's switch to the daily time frame and check. I didn't even do daily check on the others, but still let's check on this. On the daily it's still the same, but then the market appears to be on a retracement. And then what we have here now is like a bounce back. He has tested this and he wants to start bouncing back up. So on 4 hours, which we'll cover for this week for us, the market is still a bit confused. Okay, you don't just jump into this trade, into this market, because it's not, it doesn't have a strong clarity. It's a market that is trying to recover from a fall, and that's what we are seeing here now. You can see that this for the past 2 weeks is that it has been falling and just began to retrace back up. So that's about that now. So I can't, or rather, I won't be able to. I won't want to impose any key levels to this. All right. So now let's switch to currencies, and this time around, let's check Euro USD. Let's check Euro USD. Okay. And so on Euro USD, we go up back to the to weekly time frame. And on that, what we have here, the market is moving sideways, but it's an overall bearish market. Though around here now, he has beaten the 50 and the 21 period moving averages, targeting the 200 period moving average. But still, the market is sideways based on this. But when you now come and consider the immediate periods here, comparing the last 2 weeks or more, you have a series of higher highs and higher lows, which today or rather this week appears to have peaked. Okay, so that's a pretty bullish short term. But long term, you see the market structure is showing bearish. Market structure is showing bearish, but currently here is showing bullish. So you can see the conflict there, right? And you would want to switch to lower time frame. So switch to the lower time frame. This time I want to go straight to the 4 hours time frame. Okay, so here on 4 hours, you see that the market structure is still strongly bullish, and the trend bullish still, right? So everything is looking cool for Euro USD to keep going up. How far can that be? So that's why you need at this point now to consider the key level. So here we will Look at the key levels for the week quickly. Now this period hasn't ended yet, so but we'll still have to, because it's the highest so far, we'll still have to connect with it. So let's do it all the way to here. So at this point, uh, let's look at the volume here currently, because the volume may play a role here. 21,506, and compared to the previous volume of 9,196. Now the current volume here now is 6,000. So apparently this period yet hasn't gathered enough momentum, enough in volume. So there's a possibility that this may drop from here, because it will require some energy, some momentum, because it has been pushing up. So you will drop from here. So as it's dropping, okay, you are going to be looking at 50% here. It will be the ideal place between it and 200 period moving average. So we may not even be considering 38.2%, but we'll just be looking at 50% to 200 period moving average. And 200 period moving average currently is at 1.0784, while 50% is at 1.07905. So this is the area you should be looking at, considering making some key level entries. Okay, okay, so that's on the Euro USD. So I will just bring in the GBP USD to wrap it up. Then we'll now consider the risk involved in all of this. Okay, the risk and reward to expect. Okay, so quickly let's switch over to GBP USD. And where's my GBP USD? Okay, here is it. So we are going to switch to 4-hour weekly still and start from there. So from what we have here on the weekly time frame, GPS has already beaten the quietness here. It's been a sideways market all the way, for a long while after a long downtrend. So the question is the GBP now picking up to become bullish? And how far can it go? Because right now on the weekly time frame, it's trading above all of the moving averages. Do you get the point now? If you look at the counterpart Euro USD, Euro USD is still heading towards a 200 period moving average, but GBP already has beaten 200 period moving average and it's above it already. So trading above all the three moving average indicators on the weekly time frame. So from this now, you can confidently say, well, there's a high probability that GBP USD, maybe with some retracement to gather momentum, can push up to this place, which is 1.31, 313 levels. Okay, because almost there, 1.9298 is already approaching 1.300 levels. Okay, and that of course you may encounter some resistance up above here. So with this, we switch to 4 hours also, and let's consider what we want to do this week. Okay, so and here the trend is bullish, the structure is bullish. So what we just need to do is to pick and plot our move Fibonacci, and incidentally, this same period, what we are thinking that will happen to Euro is already happening to GBP USD. The price is likely to go down from there. So with that, let's drop it. Okay. So with that, if that happens, so we are looking at 50% is here for this and 38.2, then 200 period. So we are going to be considering, from here, 200 period is moving average, 200 period moving average is 1.27425, and 38.2% is around 1.27570. And of course, 50% is 1.28017. So this is the area we are considering making a bullish entry if the retracement actually occurs. All right, because sellers will jump in if this closes bearish. And so, but then because of the structure you've seen and the trend you've seen, you want to position yourself to enter for buy around within this area. So meaning that you can actually make one entry up here, second entry somewhere around here, and the third entry down here if it gets here. And that means you just pick one lot. So from here now, let's talk about the risk. So in managing the risk at this point, let's say you want to expose 3% or 5% this entire week. Okay, so now I don't know how much your fund is, but whatever it is, just use your calculator and calculate. Let's look at the risk involved for now. Let's look at for this, for example. Our stop loss should be somewhere below here. Okay, somewhere around here, which is around 1.607 or so, 774. So let's just use that around that. And then if this entry happens here, that's around 131 pips. If it happens around here, that's around 145 p 146 pips. If it happens entry happens around here, that's around 192, almost 200 pips. You get that? So from here, if we open 3 positions and want to reach 5%, so let's calculate from here. Let's say this is 200 pips, but it's 191 pips, 191.4. 191.4 pips will give us okay, so you now add that to the one you see get for here. Okay, so let's add that to the one from here. So this is 136.4, 130, that 148.6, and then 190. Let's just do 195. Okay, 193.6. So add 193.6 to 148.6 or 148. Let's just do 148. Okay, let's do 148 and then here do 135. So when you add the three of them, the total, okay, the total number of lots. So ask yourself, if that you risk that quantity, add it up together. If you risk that, how many lots should you use? Let me use somebody that has $100 or $1,000, for example. For $1,000 and you risk 135 pips, 148 pips, and then 193 or 194 pips. So you know the total there. So that's what you have on the screen there. So by the time you factor that in, the question is carry that and divide by how much you have. Right, that is use it to use your how much you have to divide that number. Okay, for instance, let me pull out the calculator. Let's say we have 193.5, and then we have 148 points. Let's say 0.52, and then we have 135. Okay, so we have a risk of 477 pips. Okay, so now I want to enter 3 lots. So if you divide if you now use this and divide, you have $1,000, divide by 1,000. So that will give us 0.47, 0.5 approximately. So 0.5, and we have 3 lots to do. So let's do 0.5. Okay, let's still do 0.477 divided by 3. So your lot size will be 0.116 approximately for each lot size. So at here you do 0.16, 0.16, 0.16. So if you do 0.16 times 3, total will be 0.48. Okay, so now first 0.16, assuming it goes south, multiplied by 193.5, so that's 30.96. Then the next one will be 0.16 multiplied by 148.5, that's 23.76 plus 30.96. Okay, then 54.72. Now the next one there is 35, 135. 135 times 0.16, 21.6. So plus 54.76, is it? I hope I'm correct. So that's like 76.3. Now inside of 1000, 0.07. So now okay. So this is like 7.6%. So that will be like 7.6%, meaning that you may want to reduce that lot size so that at the end of the day it comes to, so probably you may want to use 0.01 or 0.1, rather 0.1 or 0.606 rather for each position there. So that way, the risk will come down to your 5% or less. So that will be your risk. So your target now, which is reward, of course, for your reward for this potential reward, first of all, this is a place you get to and you have break even. So this one is already 190, okay? And if that happens too, for that, this one is triggered and it returns up. Of course, you are talking about this one already is around 236, okay? So you can see that your risk reward is quite impressive. And then from here to this is 249, but the major target at this point now will be here. So if you move that from here to here, that you're talking about already 421.1, and that will be quite high. Of course, it could happen this week, it could happen next week, it could happen next month, it may not happen immediately. And then you look at here too, that'll be around almost 468. So the risk to reward ratio is quite impressive if you consider that. So you just need to manage your position size well. That's all you need in this regard. Okay, so with this, you want to apply the same thing to the other instruments when managing your risk. And the video is already long enough. So take your time, go over this. All right, so that's about how much you can take for the market analysis for this week, covering gold, crude oil, Bitcoin, Euro USD, and GBP USD. I appreciate your patience to watch to this point, and let's take action. Of course, signals will come in as the days progress, and I appreciate you believing that the week will be profitable with green. Thank you, and God bless you.